Welcome to my office, where we're going to talk a bit more candidly about the markets and what's going on. If you want deeper dives, then I suggest you watch my main channel, which I'll link in the description below here. But in terms of what's been happening, at least in the last 24 hours, we saw a sharp sell-off in gold and silver, and oil also tracked lower, while the stock market didn't do too badly, which in terms of the cycle isn't that surprising. That's something we've been looking out for. Now, the whole narrative with gold and silver is that it's just the paper that's getting sold down. Hedge funds, institutions, etc., just need more dollars as opposed to the metals. And after such a mammoth move up, that's where the money's going to come from. Now, narrative aside, we already saw the monumental run up in precious metals. And typically when things go over the top, it's natural to see a sell-off and the markets to take a breather. Now, in terms of the macro market structure, we haven't seen a technical breakdown of the precious metals bull market, but they got very close to their pivot points in the recent session. Now, off the top of my head, it was around $4,400 per ounce for gold and about 60 odd bucks per ounce for silver. They got close to breaking down from those levels. But even though we saw that massive sell-off, it's to be expected. And if you watch the last couple of videos on my main channel, we spoke about the short-term breakdowns of their 50% levels and how they were working into a weak position in the short term. So those trends have just continued, but we haven't seen the macro market structure breakdown yet. Now, oil also sold off, and that's got to do with some de-escalation stuff going on. But in terms of narratives and news, that doesn't really matter when it comes to the price action. We know that price leads the way and then the narratives and news follow. But even though we saw that sell-off in oil, we haven't seen any meaningful breakdown of major support zones. So it's still sitting in a relatively strong position, and we could easily still see higher prices from here. But the real interesting one in all of this is the stock market. We saw a massive dive, like I said, in gold, silver, oil, and the US dollar sold off as well. But the stock market held up pretty good. It was a volatile session, but it did end up closing roughly where it opened. Now, I'll take you to my hand chart here, where I'll have a go at talking through the chart. And hand charts are just invaluable for really analyzing what the volatility is really like. Now, it's behind me, it's going to be a little bit backwards, but even though we saw that sell-off, it did recover back towards the close. I'll try and get this better for you. And we're still seeing the lows bought up here. So we're still seeing some demand come into the market on every little sell-off. But the key thing to note here, which you always lose on a computer screen, is just the magnitude of the bars. We're seeing absolutely wild whipsawing moves, which is more indicative of distribution. So that still has me on red alert for any bounce from here to be a dead cat bounce, which also lines up with our cycle. So that's something we're certainly going to explore a lot more on my main channel when it comes to the upcoming rally, if we get a rally from here. As for Bitcoin, I'll get my Bitcoin chart up for you. So Bitcoin, obviously we're way down here as the market's been selling off aggressively. We did identify the potential weakness beneath $74,000. And as soon as we broke away from 74K, it's just been a very sharp sell-off. But in terms of some time frames and a bit more advanced stuff for you guys, you can see the peak here is the 16th of March. We had a low on the 18th of December, and we also had a peak on the 18th of September. So we're getting repeating time frames, and this is much more advanced stuff. So it was natural to see a sell-off take place from here. But the thing that has my attention is that this low on the 18th of December was an intermediate low. It wasn't a major peak or a major trough. It was in between a more prominent turning point, both peak and low. And the same is true for the September peak here. It was an intermediate peak. It wasn't a major monthly turning point. So that has me thinking that this peak in March is only going to be temporary. Now, it's very early days and the price action is king at the end of the day. That may not end up being the case. We are seeing the short-term timeframes turn down already, which we're well aware of. But now I'm looking out for some kind of base to potentially build on top of that 50% level. What you can't see on this chart is that this point here is the midpoint from the peak down to the higher low, the major higher low that took place from the current bear market bottom here. So if we can see support hold up where we are and we begin to see some higher lows on top of our 50% levels, then I do think that this peak on the 16th of March is going to get broken. Now, it's a moving target, and that's some very short-term analysis for you. But I just wanted to give you something a little bit extra with what's on my radar when it comes to Bitcoin specifically. So I might leave it at that for the first day in my office on the new channel. Let me know what you think in the comments below. This is just a bit of an experiment at the moment, as I'm just trialing out some unscripted off-the-cuff stuff and a little bit different to what I usually do. So I'll leave it at that. If you want more from me and some more detailed stuff, check out my main channel, link down below. But that's it for this one. Wishing you more health, wealth, and happiness. And until next time, I'll catch you then.